All right, welcome. Welcome to this week's presentation. This is a story about how I scaled from 0 to 50 units in a year. For a long time, I put off making content because I felt like maybe my process wasn't repeatable and maybe it just didn't apply to other people. And I really very selfishly sprinted to 50 units. And it wasn't until almost a year later where I realized I should probably start posting about this on social media. I was posting a little bit here and there, but it became clear to me the value of having a community, both for myself to network as a real estate investor, as well as just others interested in getting started in real estate investing. As recently as last night, someone asked me, why does every person investing in real estate also have to make a social media following? And I said, that's not true at all. It's just the only people that you know about doing real estate investing are the ones that are making a social media following. So just to be absolutely clear, I got to over 50 units before making any posts online. And I had a net worth of over $1 million before going down this rabbit hole of doing any sort of online teaching at all. And my business was already self-sustaining, and I could have just continued on that path if I wanted. I am continuing on that path. I'm just doing it a bit more publicly now. So, this is supposed to be the full understanding of how I got to 50 units in a year. That's my tagline, 0 to 50 units in a year. First question everyone asks me is, how did you do it? And today is literally how I did it. Now, I don't know if it's repeatable for everyone, but there's a lot of lessons that can be taken away, and anyone can build wealth in real estate. And anyway, anyone can avoid some of the mistakes I made in the process by learning uh, how I went about it. So I'm going to go ahead and share my screen, and I'm going to show right off the bat the actual timeline. And this is shared in the community resources tab, the actual path I took to 50 units. And I'm going to go ahead and share that now. So this is it, right? 0 to 50 in a year. Between closing on my first property in Cleveland, Ohio, and identifying a triplex that I ended up closing on, it was a year-long period. If you want to fight me and say it was 13 months, because, whatever, have fun. Before this, and I don't want to pretend for a second that I was just broke hanging out in my parents' basement doing nothing before this. So I don't want someone to think that with literally $0 they can get 50 units. But it does not take nearly as much as people think. If you have $25,000, you could start doing the BRRRR method right away. You could start adding 40,000 to your net worth every 3 to 6 months with just a $25,000 starting capital. And if you're really an entrepreneur and if you can really sell yourself, of course, you could partner with people and accomplish way more with way less. So my goal here is to absolutely minimize the barrier to entry as much as possible. This is my story, and I'll start from the beginning. I did have a few primary residences that I lived in. I rented out the extra bedrooms. And so when I got started, I technically had 3 homes, 2 homes that I house hacked, and 1 home that I was living in as my primary residence when I started this business. And I scaled from 0 to 50 units in Cleveland, Ohio. There were some other cities involved as well, but 0 to 50 units out of state rentals in 1 year using the BRRRR method, basically the BRRRR method, basically renting to Section 8 tenants. I was inspired by Robert Kiyosaki, Rich Dad Poor Dad. I was also inspired by Tom Cruise's Section 8 Secrets formula. I was a little bit inspired by Antoine Martel's Flip system. I've signed up for these programs. I've paid, these people for books or services or whatever. And I don't think there's any issue in paying for help. I love to pay for help. If I could pay to win, I would do it any day. I do it every day. So yeah, I don't want anyone to think like if you're literally have $0 that you can have 50 houses tomorrow. It's just unrealistic, and I want a realistic experience for everyone. But if you have nothing and you gain knowledge, you can definitely fight your way in the door. You could wholesale, you could take pictures, you could network with investors, you could partner on deals. So the opportunity is what you make it, and the opportunity is endless if you have a great enough mindset. Now, I'm pretty sure I'm sharing my screen here. Let's go to February 2023. Now, I worked in software sales for about 6 years, and the whole time I was planning my escape, if you will. And I felt like real estate was a good option. I did take about a year to a year and a half to attempt trading stocks full time during COVID. I was not successful. I was getting by some months, and some months it was just a setback. And but I knew I needed to find another solution, and real estate seemed to be the way. So in February 2023, I bought my first home in Cleveland, Ohio. I came across an ad online. It was Section 8 Secrets, and it was about houses in Ohio where the purchase price was 60,000, cash flowing 500 a month. At the time I had a home, the home I was living in was worth about 300,000, and I knew if I rented it out, it would break even. I had another rental that was worth about 300,000 at the time, and that was making 400 to 500 a month. So I was figuring these properties in Ohio, just buying these properties in Ohio and cash flowing 500 a month by filling them with Section 8 tenants, that was already 5 times better than the real estate method I was doing in terms of cash flow. So I bought into that concept. I was like, I'm just gonna buy some, grow my portfolio. So I bought my first property 20% down, and this was actually a conventional loan. So I technically started with $50,000 cash when I began this process, and I used some of that money for that first down payment. I financed it with a conventional loan. So I had to both pay off my car to qualify for the debt to income. I literally had to pay $20,000 to Ford to pay off my car so that my debt to income would be good enough to qualify for this conventional home. And it was a $69,000 home. I found it on the MLS. I found it through a friend's real estate agent, and he was actually a remote real estate agent. I was just searching. I didn't know much about looking at comps yet, but this guy was a few steps ahead of me. He had like a dozen units. So I took his word for it that it was a good neighborhood that would grow, and there was value there. And I did the math. I realized if I rented out to Section 8 tenants, it would be profitable. That one ended up cash flowing like 700 a month. I found my first property manager. I found two property managers. One of them I found through Discord, a community of real estate investors. The other one I found through another real estate agent, which I'll get to in a second. So I bought the first one. I did a conventional loan, very painful. You know, I needed to have the debt to income. I had to pay off my car, which was stupid to get that loan. But that was the first one. At this time, I still had a high paying software sales job. So I wasn't super worried about the expense. I just wanted to get my foot in the door. Now, if you can see my screen, you see the full timeline here. In March 2023, I was let go from my job. I closed a big deal, and the company itself was struggling, and they let me go. They let me go. They let a lot of people go. They let my good friend that referred me to the company. They let my boss go. They let everyone go at the same time. And the good news was I did simultaneously close a big deal, and that ended up being another $40,000 commission. So like I said, I was doing okay before. I had a pretty good, well-paying software sales job before I got into real estate. And I did have a couple of primary residences. And so that $40,000 commission helped me make the next down payment. The next down payment was a little bit different. That was a DSCR loan. Now, if you're listening to this, a DSCR loan is what allows you to scale indefinitely, because you can only get up to 10 conventional loans, but you can get an unlimited number of DSCR loans. You got to create an LLC, and it's technically in a business name, but there's no limit on how many DSCR loans you can get. And even though it's guaranteed by you and your personal credit, you don't need personal credit to qualify. So it no longer mattered that I did not have an income to qualify for that loan. They're a little bit more expensive, like maybe they're 0.5% or 1% more expensive as far as interest rates, but it's a way easier process. So that was how I got my second home. Third home, I did this was my first time. It's actually an interesting story. So I found this home through one of the real estate agents I was working with. It was a $60,000 home. Just thought it was a good deal. It was just going to be another typical 20% down payment. And at this point, I didn't have a job. I was like, it's time to go to Cleveland, Ohio, check out these properties I have. And by one of the real estate agents, I was introduced to a hard money lender. This hard money lender is going to be an instrumental part of this story. So the hard money lender, I had a phone call conversation with him, and he told me that there were 10 units available for me that he would finance the full purchase price. I just basically had to sign the loan documents. And at this time, I had 5 properties total. So the idea of picking up 10 more units for free was insane. So I literally flew out to Cleveland, and this was the deciding point for me to fly out to Cleveland, because I didn't really, a $60,000 home, another $60,000 home. Those two things by themselves, obviously, it's, you want to check up on your investments, but that wasn't the final spark that made me fly out there for the first time. It was speaking to this hard money lender that was like, yeah, I'll finance these 10 units for you, no money down. All you have to do is sign the dotted line. And I'm like, okay, this is definitely a scam, too good to be true. But anyway, I was under contract on my third home. The lender, the DSCR lender, backed out at the last minute. And they said, loan size is too small. We can't help you. I was supposed to close in like 3 days. Meanwhile, I have a meeting same day in the office with this hard money lender. And he says, you already have a track record. You already have a few units. Clearly, you're hungry. You're out here. Come to my office. We'll get this resolved. So I get to his office, and I'm excited to talk about these 10 units. I drove from Cleveland to Toledo. That's where the units were, to check on the units as well that morning. And he said, that problem you have with that loan closing? And I'm like, yeah. He's like, well, you're approved. We got that $50,000 for you. So you could close on that home that you sought out for, that you sat in escrow on for 30 days. And I already put 18% down, or I was planning to put 20% down, but he let me put 18% down. He covered the rest. And that was my first hard money loan. And that was my first time working with a hard money lender. I was kind of up against a wall. Either I lose this deal or I get a short-term loan. So I got the short-term loan from the sketchy guy that promised to finance 10 units for me for no money down. So I got into that loan, and I'm like, okay, well, this is a problem, right? But I'm going to focus on this full time. So at least I have a year to figure it out. And now we're in April 2023. Then I bought another home through him where he financed the whole purchase price. He had another loan originator that he worked with, and he basically said, we got this home for you. Check it out. Sign right here. We'll finance it for you. And I didn't want to go too far down this rabbit hole at the time, but I was willing to close on another home, no money out of pocket. And I actually just want to pause right here and say, it's not easy to find lenders that will finance a full purchase price up front, but they're out there. And if you are doing renovation projects, you do get a ton of leverage. And if you're starting with like 20, 25K, you could take that very far. And you could cash out, refinance, get all that money back, and grow a portfolio and easily build 100 to 200K worth of equity a year, easily, right? So I'm also, on that same note, trying to either create or expose an industry of lenders that are willing to do this. There's no way that there's this only one guy willing to do this. In fact, I've already done it with 3 different guys. I've done it with 2 guys in Ohio. Those 2 guys don't know each other at all. But both of them, one of them kind of manages a fund of like $100 million. The other one, it's like 1 million or 2 million of his own personal funds. But both of them have had experience with the BRRRR model. So they understand that if the borrower defaults, they can take over the property and then just do the BRRRR model themselves. In fact, it's such a good business model that as soon as I have an extra $100,000 in cash laying around, I'll probably want to be on the other side of this. And I would happily fund 100% of a purchase if I underwrite the deal and understand that it's good enough. So not only have I proven this with 3 people, there's also quite a few people in my DMs that are kind of on the sidelines waiting for the right opportunity to fund 100% of a loan itself. And also, as the community gets bigger, as I get bigger, as the network gets bigger, there's more people that will do this. So even if I have to literally create the industry myself, I'm on my way into doing so. I just had a call yesterday with a lender that will give 100% of the purchase price. All you have to do is pay closing costs. So this is out there and it's real. So I didn't talk about this for a long time because I didn't think it was repeatable, but I just keep proving over and over that it is. So next home I got, seller financed, 4% down. I don't even think I actually put 4% down. I don't think I put anything down. I think I'm counting that as like the $4,000 in costs to pay to renovate the kitchen. And then I actually took over a land lease. It's technically a land lease with a 5-year balloon. I'm obviously, I don't know, whatever the date that says is, that's how far into it I am. Won't be hard at all to pay it off or just refinance it. So I have technically purchased a seller finance deal in this road to 0 to 50. And then the next home was let's see, that was another single family home, 0% down to the same lender. At this point, I was saying, at this point, I was saying I was willing to take on tenants. Up until here, all of these properties I purchased were actually vacant, and I filled them with Section 8 tenants. And I started taking on tenants because I was just like, the Section 8 process is so long. If I could get a house, basically no money out of pocket, I should just do it. And then something else happened in July. I was able to get a second loan on one of my homes, and that was an additional $150,000 in liquidity to grow this business. So that mostly went to reserves. At first, the goal was to always keep at least 100K in reserves. It was also to kind of help me just live a little bit at the time, literally just basic expenses. And from there, I got into a duplex in Detroit, and 30,000 in cash of mine. I had a partner on it, so they came up with 20. We thought we would try and conquer a new market. I paid for a program that would help me learn how to flip homes, because up until then, I hadn't really done any renovations. I thought I'd pay for a program, and it just didn't work. Detroit was not kind to me. We did a full renovation. It was like a $90,000 renovation. Purchase price was only 30. I've learned in hindsight how dangerous that is, but the company on the ground actually was able to perform in their renovation. So it wasn't that big of a deal, at least the renovation part. But what was a big deal is I was basically sold a bill of goods by the owner of the brokerage that got me into this deal. So I felt the love. Like, this guy's taking time out of his day to tell me how great of a deal this is, how it's such a no-brainer. I don't know the Detroit market. I was starting to get more and more comfortable with running my own comps. And he was suggesting, like, you buy this, do a cash out refinance. 5 years from now, you're hitting a home run. It's gentrifying everywhere. They're doing renovations up and down the street. You got to get in now. And I'm like, okay. At the time, I was already looking for a few projects in Detroit. And my partner on this, his girlfriend's family was from up the street. And so, I didn't do as much due diligence on this because I had another partner involved that I thought was more familiar with the area. I trusted the people that were selling it to me. I felt like they had a reputation to uphold because I paid for a program to get introduced to these people, and it ended up being a flop. We needed it to, well, I guess it's how I acquired 50 units, not how I failed at one of the projects. So that was that story. And then in July, I picked up a few more packages from this original lender. And when I say it was from the lender, this guy has a book of business. He lends out 100 million a year. He has 800 investors, and simply some of them pass away, some of them get desperate, some of them just don't want to be landlords anymore. And he'll have loans on these properties, and he'll be able to assign these loans to new buyers. And so even though I didn't really always find homes directly through him, I would find them through his network. I would have him introduce me to a property manager. Maybe that property manager had extra properties for sale. He had a loan processor, and they would network with people that were selling properties. So that was basically how I got these two packages of 4 in July. I guess I got 3 packages of 4 in July. Well, no, 2 single family homes, 4 single family homes, a single family home, and a triplex. So in a short amount of time, I added another 12 units, and then I was at 20 units total. Let's see what I have. Yeah, so right. And then a lot of them actually had tenants. So 4 of those units had tenants, actually more than that. At least 6 of them had tenants, and they were just private paying tenants. I was like, great, happy to have some cash flow for now. And then I just kept going. I also very much had a mindset where 6 months into this process, I needed to make significant progress or else just go back to working, right? I needed to make money. I needed to build a business. I needed to be big enough, fast enough to rely on. I also felt that if at the time this was the calculation, if I have 50 units and they're all cash flowing at 500 a month, that'd be 25,000 a month. That would be enough for myself to live off of easily. It would basically surpass the income I had from before from selling software. And so it was a simple calculation: get to 50 units, get them all cash flowing, 500 a month. Now, obviously, it didn't work out that way, but I was very specifically sprinting to 50. And going into this time of year, actually, October of last year, I came across a portfolio of 23. And at this point, I already had some renovation experience under my belt. A lot of these packages of homes were mostly fixed up or rent ready or rented already, but there were some like kitchen remodels, bathroom remodels, interior, exterior painting. And I had my property manager basically saying, I could do full renovations. I could do full gut rehabs. I'm just waiting. Like, I would love to do this, right? I'll give them to you at cost. Just give me the privilege of also managing these properties. So I have my guy on the ground basically begging me to do renovations at cost. Seems pretty good. And I also have my lender saying the real way to get out of this hard money, you're not going to consistently find turnkey investments at such a substantial discount. You have to add value. You got to find the distressed properties, hire a contractor you trust. I'll fund the whole purchase price and renovation. At this point, I wasn't getting renovations funded, not really, not much at least. The lender was like, I'll finance the full purchase price and renovation if you find a property that's at that much of a discount. And so I didn't just find one, I found a package of 23. And at the time, the thought process was, I'm already getting these houses with zero money down. There's some cash flow. We're working on getting them rented out to Section 8. The cash flow is growing. I'm able to keep most of my cash on the side in reserves. I think there's still around 100 to 150K in cash. So I was like, if we could get this whole, hold on one second here. If we could get this whole portfolio financed, then we should do it. we have the reserves, we have the cash, we have the team that wants to build the homes and renovate the homes. Some of them were occupied. I think five out of the 23 were occupied, or six. So it was a good time and place. I had calculated that it was probably worth 1.7 million, this portfolio. I was able to buy it for 980,000. And at the time, I believed that it was needing about $150,000 in renovations, which I had in reserves. It ended up costing closer to $250,000 in renovations, which is a whole other story. I think the contractor ultimately ended up ripping me off. But yeah, and that was my next big purchase. And from there, I jumped from 23 units to 46 units. At this point, I was in a lot of hard money. My mindset was, well, my mindset the entire time has been worst case scenario, I just go back to a job, right? File file bankruptcy, whatever. I won't be able to get any loans again, but I could go get the same job, make some money, pay for stuff, whatever, right? Worst case scenario, I'd have the life I already had before. But the step before that was like, I know I'm buying these homes at a discount. So even if I'm in hard money, I can basically just sell them for what I bought them for and just get out. So I knew if I was getting in with strong discounts, I'd be okay. So, I did that. Then I got into, what? At this point, now that I'm looking at this again, I'm reviewing that after I did this deal, I'm like, okay, clearly we're gonna have to put all these reserves towards renovations. I don't feel comfortable buying any more homes without some help. So I did do one 60-40 split. I found another capital partner. We actually finished selling that home yesterday. We all made a profit and it was great. But I found someone, a friend of mine, he was my CPA in the past. He came up with $30,000 and that got us into the home. We also got some of the renovations financed and we fixed up, rented it out, and ultimately sold it about a year later. On this deal, again, it was zero out of pocket, but it was because I had a capital partner on it. At this time, I don't repeat that. I like to take on deals myself 100%, but I have technically done that model as well. And the frame of mind I was in at this time was my reserves are going fast for renovations. I need to find and build a track record for another way to finance the purchase of homes if I want to continue my growth. It wasn't until December of 2023 where I succeeded at my first refinance. So up from, let's see, I bought that first home in April 2023. It wasn't until 8 months later where I started succeeding at refinances. And those ended up being some pretty substantial cash out refinances. I don't remember off the top of my head what I got from the first one. I could probably look it up. I'm actually going to look it up. Let's see here. Refinance. There we go. Okay, so from my very first refinance, I received $63,000 cash back at closing. 63,000. That's I think that's the biggest check I ever received at the time. I was actually able to do it through the same hard money lender that got me into the loans. I knew he had back-end financing options available. I was scrambling to find alternatives because I just didn't trust the whole process. But yeah, I went with the homes that were the easiest to refinance first that had some equity. And I got $63,000 back in my first cash out refinance. And for those listening and know my story really well, I was living in Las Vegas at the time, and I took the evidence of both having 50 properties and succeeding at my first refinance to move to my dream city of San Diego. So once I got that cash out refinance, um, I did slow down a little bit. I didn't buy my next property. I was happy I got to 50. I moved. I was focused on stabilizing. I was just focused on stabilizing. I basically sprinted from 0 to 50 in what is this, 10 months, 0 to 48. I stabilized in that time period. I did 1, 2, 3, 4, 5, 6 refinances, and there were 3 properties, 4 properties, 1 property, 3 properties, 1 property, 1 property. So I did a bunch of refinances in this period between December 2023 and April 2024. And then once the ball was really rolling, and I got cash back on all these too. So I'll actually see what they were. And when I say 1 property, I mean that was a duplex, fourplex, 3 single family homes, fourplex, 4 single family homes. So first one I got $63,000 back in the cash out refinance. Next one I got $25,000 back in the cash out refinance. Then a real big one, there was a nice big surprise. So when I picked up this 23 unit package, it was composed of 3 quads, 5 duplexes. One of those quads appraised really well. For whatever reason, the lender decided to allocate the same loan amount across all 8 properties. So even though the loan amount on the whole package was $985,000, and within the 8 properties, each one had a different valuation, they just decided to do a straight line. Okay, you owe $130,000 on each property. So I owed $130,000 on this property, and it appraised for $390,000. So that $390,000, when I did the cash out refinance and got 75% of that valuation, I was able to get a $292,000 loan when I only owed $130,000. After all fees and whatever, it resulted in a $124,000 cash out refinance. I mean, that obviously helped. That alone fueled my ability to continue forward and confidently get into some more properties. Of course, I'm using leverage the whole time, but you need money for holding costs, just basic living expenses. I mean, I have rent and groceries and whatever too. And then there are also some backlogged renovations. So I didn't just buy everything and do all the renovations immediately. I strategically said, okay, what properties can I do the renovations on that would stretch my dollar the furthest? So I was doing renovations on the properties with the highest value so that I could have the biggest cash out refinance, which is exactly what I did here. And then I used the cash from the cash out refinances to do the next renovations. My next refinance, I got 13,000 back. My next one, I got $39,000 back. And this is all in the period right here between December and March and April, end of April. And then I did another and got 15,000 back. And that's the story. That's how I got from 0 to 50. That's how I got from 0 to 50 in a year, right? A lot of it, again, this is the full truth, the full transparency. A lot of it was reliant upon a lender that financed the entire purchase prices and in some cases, some of the renovations. I have a whole other presentation on why it actually makes so much sense for him. That lender charges a 15% annual interest, so paid monthly, and 6 origination points. So this guy is basically making a passive, you could argue he's making a passive 21% a year. And if he turns the money over faster, right? So let's say I use him twice. Let's say I take $100,000, pay 6 points origination and pay 15%, and I succeed at refinancing in 6 months. And then he lends that money again. That's another 6 origination points. If he's turning over his funds twice a year, he's making 27%. So yeah, it's definitely expensive, but if you're financing the full purchase price and renovation, it's also a lot of risk, and you frankly deserve that. I've even recently done deals where I've had, I make posts about it online all the time. 10,000 back at closing, 35,000 back at closing. It's nice to add that liquidity, and then I have a full year to actually do the renovations. I try to get to it right away, but it's nice to have the control of the funds. So let's see. I mean, that's the story. That's how I scaled from 0 to 50. Now, for people that are saying, oh, well, I don't know the same one lender you do, the lenders are out there. And the moral of the story is once you form a track record, people want to work with you. They want to negotiate with you. Money finds you. So that guy never would have sat down with me if I didn't already have 5 properties. And he's expensive. So now people hear this story and they say, hey, I'll lend you the same money and I'll charge you half the price, right? There was a friend that I converted. It's actually, it doesn't come up in this story because he was already, after I got past the 50 units. Actually, let me see which one that was. Let me see which one that was. Yeah, okay, so actually this home right here. So yeah, I was already past the 50. I did have a home that was financed by a friend, $70,000. He charged 12% and I think 2 points. And, you know, I already had a track record of 50 plus doors and however many refinances I just rattled off. So at a certain point for a lender, it becomes a no-brainer. You're making a passive return. You're just getting cashed and you don't have any of the stress to deal with actually finding contractors, finding tenants, finding deals. So, you could take a completely alternative approach and just do this the industry standard way. If you do this the industry standard way, you could still create incredible wealth in a few short years. So go ahead, buy those 2 or 3 single family homes, put that 20% down, build a track record, go to a fix and flip lender, have them finance 90% or 100% of your purchase price, which by the way, in these cheap markets, right? Let's just take an average home, okay? Or a crappy home in a below average neighborhood, $100,000. And let's say you want to put 20% down. That's 20,000, okay? Now let's say you talk to a traditional fix and flip lender and you're buying a dilapidated home and they're asking for 10% down. Well, it's a dilapidated home, so you're not going to pay 100,000. Maybe you're going to pay 50, and maybe 10% of that 50 is only 5. So instead of talking about coming out with 20K out of pocket, you're talking 5 plus closing costs. So 5 to 10 instead of 20 to 25. And now you build that value. You take out the renovation budget on draws. And I'm just telling like the industry standard and what's out there. If you don't find like a particular hard money lender that will just finance everything for you up front, you can take that same $100,000 home, purchase price is 50, you put 5K down, and then maybe you put 20K in renovations. You do a draw program, maybe you have that 10K in cash, maybe you have it in credit card. And when you finish, the home is now worth 100. So in this case, you're all in for 70, and of that 70, you borrowed 65. Now it's worth 100. You just built $30,000 worth of equity. And when you do the cash out refinance, you pay back yourself and the original investors. So if you just follow the industry standard approach of fix and flip lenders, you end up being in on a house where you built free equity. If you did it right, you're getting cash flow because you rent it out preferably to Section 8 tenants where there's a higher margin and it's guaranteed back by the government. You built equity, you built that 30K in equity, you get all the money back that you started with, if any, and now you have a free house. And this is how you scale. This is how you scale indefinitely. And if you have a bigger bankroll, you could just do more faster. If you have a small bankroll, if you only have that 25K to start, then you could do this every 3 to 4 months. And by the end of a 12-month period, you could have built $100,000 worth of equity plus 3 cash flowing properties, right? Plus now you have a track record to keep going. There's your 6 figures right there. It's, it's actually very achievable if you can build a team on the ground that you can trust, which I have access to that in my community. If you could find lenders, I have access to that in my community. If you can find deals, I have access to that in my community. So even though I scaled from 0 to 50 in a year, right? I guess I had a little bit of a head start because I had some cash because I was working my butt off my entire 20s. You can still literally do this and make a full-time income with just $25,000 to start. If you have less than 25,000, fine, get your hands dirty, partner with someone. I don't know, maybe become a wholesaler, maybe become a lender, maybe become a contractor, maybe just get involved in some way or borrow the money. Find someone that wants to get interested, a family member, a friend, someone on the internet, maybe someone on the community. Borrow that 25K, get into the first deal. And you might be thinking, okay, great. So I built 30K in equity per deal. Who cares, right? Now it's locked up in a home. Well, you could sell the home. You could sell the home as a turnkey investment. And if you buy right, it's a high cash on cash ROI. And you could sell it to someone else that wants to get their foot in the door. Just last night, I was having dinner with someone and I was explaining to them, like, look, there's lenders that will do fix and flip loans with you with no experience. But you can do that if you're going to spend all your time and focus. And you're going to make sure you're going to make sure your contractor's on task. You're going to make sure your property managers are renting out the property quickly. And you could actively do it with no experience. The lending is out there, the deals are out there, the resources are out there. But a lot of people, including myself, they want to only bite off what they can chew. And for that, if it's their first time buying a home, they might want that turnkey investment. They might want that cash flow. So there's a million ways to look at it, and there's a million ways to get in. The moral of the story is to get started, and the opportunity is endless. This was my story on how I scaled from 0 to 50 units in a year, and I can't wait to help you do the same. Thank you for watching.